Type 9. welcome back to the Everyday Growth Advisors live stream. It's Wednesday. Welcome back, guys. How are you guys doing? Good morning. It's a crazy day. The market's just melting up all the way. I think I should start a rap, like some kind of a rap that, involves like the market that's about to fap, doing no claps, only somersaults on the back, that kind of thing. I feel like this market just requires some kind of a wrap, because we are about to take off to another level, right? And obviously this is unsustainable. It's obviously unsustainable, but you know what? Who cares? We're along for the ride, right? So yesterday I actually officially closed out my VIX position, and I can't believe it. For some reason, I closed it out in a profit. Okay? I cannot imagine. I had $30 calls for next month, okay? $30 calls for up here. And for some reason, I managed to close out my VIX calls for a profit. The IV on the contracts that I bought was 100%. And I cannot believe that I closed those contracts out at a profit. So this is an overall win-win for me. I have never hedged a position and then ended up making money from it when the market goes in the opposing way. This was officially a melt up, right? So as more and more people start to get onto VIX to buy it, I am in a very, very interesting position where I feel like we might be getting bear trapped here. So I'm about to go through that in a couple minutes here, but you know what? Let's kind of go through the whole rigmarole. Okay, and we're also going to do a fundamental analysis on LULU today. So welcome in, guys. Make sure you smash the like button. I hope you guys are having a good morning. If you have your coffee with you or whatever, I'm about to take a sip of water right now. And yeah, day 2 of the Everyday Growth Advisors mentorship course is going strong. All our mentees are doing excellent. And we're about to do day number 3 tomorrow, which is options trading. If there are any mentees who are currently in the class for this wave, give me a shout out in the chat real quick. Tell me how you're feeling. Tell me how you like the course so far. Really nice to hear from you guys. And yeah, we're just chugging along here. So let's have a look at the news real quick and see what's going on. Something about Singapore, blah, blah, blah. Economy needs to restart, something like that. U.S. stock market futures push higher. Dovish climate, and the Fed saying the money printer go brr, forever. Powell's just, right, saying, okay, we about to turn the taps on. It's about to be ice cold beer forever. And then just a whole bunch of other good news coming out. This one was interesting, right? Record electoral uncertainty. This metric says that the VIX is pricing in a uncertainty for the presidential election. And we have U.S. job reports on Friday, which is to forecast payroll continue to rebound in August from virus lows. So I think the market's kind of pricing in a bunch of different things right now. Okay. And it's great if it's pricing in, but remember, one piece of bad news is about to set it off, right? So watch out for that. Be careful with those kinds of things. I wouldn't look for too many bullish positions in tech. Just a little weird. And yeah, just be extremely careful. Okay. Okay, now TikTok deal hits a snag over apps algorithms. Something about how some part of the core algorithms need to be either included or excluded from the deal. And then Tesla share sale plans boost bonds. This is a smart move by Tesla's finance team, right? If your company has a very high pricing parity in terms of share price, then you should absolutely raise debt, right? Because if your shareholders are willing to hold your stock, then you have a edge against them, right? So absolutely good call here from the investing finance team. It's needless for me to say that Tesla is overvalued, okay? And obviously it doesn't matter. It doesn't matter whether I think it's overvalued or not, okay? The app will, I mean, the company will still continue to rise as long as people have appetite for the shares. Okay, so whether it goes to $5,000 or whatever, I don't know. But if it dips really hard, I plan to buy some. And I'm not buying until it has at least a 20% dip. So yeah, that's going to be something that I'll be looking out for with Tesla. Cash App surge during COVID-19 pandemic fuels Square stock. We actually covered this one on our mentorship course. Maybe I want to say the previous two waves. We did a fundamental analysis on Square, and Cash App was actually one of the biggest drivers for this stock. It's crazy how it was trading at $100 just not long ago, this stock, and now it's almost at double the price. Just goes to show to show you that a stock can have such a strong rally even in a short period of time. So Cash App really just showing its strength and dominance there with the improvements using, and then now you can also invest in some stocks. You can do cryptocurrencies, blah blah blah. It's a great app altogether, and there are a bunch of celebrities and big business people also backing the app, so it's a good thing. White House to target hospitals for uneven COVID-19 data reporting. Okay, and share of households that sometimes or often go hungry. Wow, that's damn. That's a big statistic, guys. Macy's posts as 431 million loss as stores continue recovery. Yeah, don't think that's going to come back really soon. Russian roulette inside Putin's race. Okay. Definitely interesting. So let's have a look at this real quick, see if there's anything different here. S&P poised to extend rally after notching the fresh record. So I'm not sure if you guys know this, but SPY went up back to all-time highs and beyond again yesterday. We hit the 161.8 fib almost extension, and guess who's left to go there? Now the Dow is left, right? Now it's only the Dow left to reach all-time highs, and I did say the Dow is going to catch up, so it is going to happen at some point. Just got to say when, right? The Nasdaq though, wowee, right? Whistles like a never-ending train, honestly. And then the SEC probes China's GSX after Tech Edu after short sellers, please. This was an interesting one, Tech Edu. And yeah, okay, great. Pre-market movers today, Macy's with a 5% move, despite bad earnings. Obviously, must be something over there that happened. 2% with Apple today, Rocket up 7%. Tesla 0.5, Flying Eagle, not sure what that is. Okay. We have non-farm payroll that came out. This is the ADP non-farm employment change, which was a little worse than expected. So that's causing the market to kind of go into a fit, I believe. Was it? Yes? No? Yes? Very minor sell-off, right? It might accelerate later, so be careful. What I do know is that it's definitely not a time to be buying tech right now, right? You want to be investing in other asset classes and not tech. But of course, if you're day trading, completely different thing. What I'm saying is investment-wise, do not be buying tech, right? If you're buying hold long positions or anything of that nature, you definitely don't want to go down that route, right? We're looking at overvaluations right now, which are stretched so far that the Nasdaq has been on a multi-day high. Okay, guys, this is not sustainable. Okay, it's not sustainable. It has to pull back at some point. Okay, but remember, there is a saying: the markets can stay irrational longer than you can stay solvent. Okay, and so as I have mentioned in the previous two streams, you go along with the market trend. Yesterday, I saw that it may be a bull trap, and so what did I do? I exited my VIX position. And true enough, we went further up yesterday. Okay, so now it seems like the real bounce is possibly going to happen around here for NASDAQ, right? Let's see here. Pre-market movers for this. CrowdStrike up about 8%. DocuSign up another 8%. Jesus. Peloton 6%. Oh my God. And NVIDIA will not stop with another 5%. Whew. Talk about craziness, okay? Talk about craziness. In fact, I haven't seen what happened to ZS here. It seems like this one might want to run further too. So let's see. Oh Jesus, it's at 168. Yeah. So, oh my God, right? So I sold it. I got stopped out yesterday on this position, which is crazy. Okay. And now it's run up all the way. So you can't win all of them. You just got to take some and move. I still made 100% on this one. that was my risk to reward ratio here, planning, you know, how I wanted to play this trade. Entered there, took it up nicely, and you know, it was a great run for 100%. So you know, have a target, get out. That's it. I didn't expect it to run up that much, so I'm happy with my gains. Okay, great. Welcome into the stream, guys. I hope you're having a good day. Make sure you smash the like button. Let's get to 100 likes today if we can. Please, 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 please. Smash it, smash it, smash it, so that we can get more people here. I really appreciate it. Thank you, thank you, thank you. Okay, another thing is the SPY and NASDAQ technical update. So, it is getting unsustainable up here, right? It's getting unsustainable, right? We have this breathe out, but no breathe in, okay? And we've been having this breathe out for a while now, right? You remember, it's always breathe out, breathe in, breathe out, breathe in, breathe out, breathe in, right? And now it's been breathe out. There's no breathe in. Where's the breathe in? We need to breathe in order to breathe out again. So in that way, we need a correction down at least to this level. Better if this level. That just means that we will bounce harder, okay? And for NASDAQ, that can happen anytime, okay? But obviously, it could also continue going. So what my position and the way that I'm going to deal with this is I'm going to take some hedges. Again, I'm going to take some hedges. And I'm going to take hedges on QQQ this time and get some either at the money or slightly out the money puts over here. And, you know, play the downside. Because this extension is definitely not going to, you know, continue forever. Play them out for like a month more. And let's see what kind of a level we should take here. Let's kind of plan it together here. So this is a position I intend to open up today. At pre-market, we're already at 303 bucks. So probably a $300 put would be a good idea. Looking at a little slightly out the money. So $300 put should be okay. Looking at, yeah, somewhere here, right? We're here right now, so I think pre-market we should come back down. This is at least the level that we want to hit, right? 280-ish is the right zone here, and there's a dual zone right here. So we want to be. This will be the key reversal level here. So I'm really looking at this point over here to be the key levels for extensions back down for fib. So let's just draw that in and see where it is, because to be honest, you can't really tell sometimes. So let's see, we're up here, we're going to draw it from there where we were, and see what kind of retracement we will get. And we want to use this as the swing low here. And let me just change this real quick to another template. So the 50 retracement would be at 289, and then the 23.6 at 281. So these are the two levels that we'll be looking at. Either extension to this level here for QQQ, or a extension to the 23.6, which eventually will be coinciding with the 50 moving average, exponential moving average. And then, of course, if we go into a hyper extension, or a hyper correction, sorry, not extension, hypercorrection, then we're looking at all the way down here, which would be this dual zone here, right? There's a dual zone here, which bulls and bears have been fighting it out for a while. So this would be the ultimate zone at which we would tackle 267, but not likely that we correct that much. How many percent is that? That's about, I want to say, about 10%. 10% correction, I'd say 5% is more than likely. So about $15-20 is still likely. So this 280 level is definitely, you know, a possible level to hit. Okay, 5% seems about right. So 280 puts would be actually the play, but I don't want that. I want something closer to the money, so that when it goes in the money, it's deep in the money. So I want to do like 280, 300, or I want to do 295s puts, and I want to take them for a month out. So let's say October 2nd or even October 16th is fine. Actually, not October 2nd. I want to do October 16th instead. So October 16th, 280, 295. 295 puts on QQQ. This is probably what I'll be going for if the price is right. And if these contracts don't have a high IV, and if I see a bunch of open interest on them, then I will definitely be taking it. So let's actually go have a look at it. So we can see from here what the open interest and volumes are from our stock bot on option string. So for October 16th, so here we go. So the implied, there we go. So there's 51.48 puts versus calls. And then the open interest on puts percentage versus calls is 71%. So a bunch of more people betting on puts here. About 150,000 shares traded, I think, 150,000 contracts traded yesterday, probably yesterday. And the open interest for this date across all contracts is about 900,000. So 900,000 contracts being held on that day. I think seems about right. It seems about right. I like it. So that will probably be the one that I will go for. I don't like VIX at this point because it's too expensive. Now, good question there. Somebody asked, how do you know how much to hedge? So let's say my open positions right now, in terms of contracts, they're about 10 grand, right? Let's say. So how much of this am I going to hedge? I'm going to hedge about 10 to 20% of it. So that's 1 to 2K worth of hedges. So if I want to hedge 2K, it's going to be 20%. If I want to hedge 10%, it's going to be 1K. Okay, so let's say the contract costs, I don't know, $800 or $900, then you can just buy one of them. If the contract costs $500, then you can buy two of them. Something like that. Okay, that's how you decide how much to hedge. Because you only hedge your open positions, you don't hedge your non-open positions. So that's how you would kind of take that into account there. Okay, so I think September, holding those through October is a good idea. At any time, if QQQ decides to come down, I think we'll be well positioned for that. So I'm definitely taking this position today as a hedge, just in case. Just because I've done it twice. One time I broke even, the other time I lost very minimally. And the reason why I sold that was because I saw the market making an obvious move up. So if it's doing that, I'd rather not lose money. I had a stop loss on that one, and it got stopped out. So not too bad. Okay. You can hedge SPY puts if you want as well. It depends. So if your portfolio is heavy tech, you could do SPY as well. And with SPY, it's going to be similar but not the same, right? With SPY, you have a little bit of a different zone here, right? With SPY, your dual zone's way down here at $300. So you have a $50 expected move if it moves all the way down, right? Which it's not going to. I think the more probable move for SPY would be down to the moving average here at 320, 310. That's more probable. Even see it going down further below the moving average, kind of like that. And then kind of bouncing here, 310 or 320. This would be the level to kind of reach, not exactly at 300. So this kind of a pullback, you're looking at, you should get some possibly out the money puts as well. Maybe a 340 put, that would make sense. Take that out for October 16 as well. And you can see the open interest on those as well and have a look, see what's going on, right? Now, do, however, remember one thing, that the neutral positions for options are always puts, okay? Because options are derivative products and they're usually used as hedges. So if you look at this, it's going to definitely be skewed towards puts as well. Yeah, it's the same thing. Our open interest also the same, skewed towards puts. Much less contracts traded here though. So yeah, keep that in mind. In fact, look at the 18 September one. Jesus. Wow. Somebody's betting heavy. Oh, we're looking at the wrong month. That's why. There we go. This is the right one. October 16th. Okay, never mind. 2.4 million? Hell yeah. Looks about right. Okay, that seems about right. If you want to go puts on SPY, that's fine too. It just depends on what your portfolio consists of. If you have long tech, then go QQQ puts. If you have long, like everything else, then go SPY puts, right? So if you're long on everything, and I'm pretty sure that majority of you are long tech, so you should take QQQ puts instead. Okay, that would be a better hedge, direct hedge, and it won't cost you that much. The other thing you can do is also buy long SQQQ, which is an inverse ETF for QQQ, and this basically its job is to always go down, right? SQQQ goes up, and then when QQQ goes down, this spikes like that. So you could also do that if you wanted to. And this is a leverage ETF, so be extremely careful with it. But I don't recommend going this route if you don't know what you're doing. Okay, so be careful. I would just go QQQ puts, much more liquid. This is probably less liquid, and you probably will end up messing something up if you don't follow it right. But there are many ways you can hedge. That's all I'm trying to say. UVXY and VIX right now are super oversaturated. Super oversaturated. Okay. The volume that's been coming in here is insane. But just be extremely careful. Okay, cool. Let me read some of this on the chat here. Smash the like button. Thank you. When is this dip happening? I want my chips with the dip. Yeah, man, me too. I know. Nvidia after hours. Tell me about it, dude. It's crazy. Michael Jordan just announced he joined DraftKings as an investor. Oh, wow. Okay. Loving it. Great content. Thank you, man. Appreciate it. Alumni. Ooh. Invictus, thank you. Yo, what up, T? Good morning. What's up, man? How are you doing? Good morning. Call for today. Oh, I wanted to give you guys a little trade idea. Little trade idea, which we talked about in the mentorship course today. And I thought I'll share it with you guys because I think it's a good setup. And I want to show you how we did the analysis on this one. So nice little setup here with Beyond. I haven't officially called this one out yet, but I'm going to say it to you guys in the live stream. I already took the position yesterday with another member from Option Swing. Beyond has been kind of trading in this descending triangle and squeezing. You can see it's been squeezing and squeezing and squeezing, right? Squeezing and squeezing and squeezing and squeezing and squeezing and squeezing and squeezing. Trying to get into this triangle here. It did, and then eventually, boom, it squeezed out. Okay, now it's done this before, and then it came back in. Okay, but this time it squeezed out of the triangle completely. Okay, and then on the 4-hour chart, here's what's happening. On the 1-hour chart, here's what's happening. You can see the beginning of a golden cross. This is kind of like the Death Star formation. So the reverse Death Star formation. So you have the 50 moving average crossing over the 150 and the 200. Powerful signal, even though it's on a lower gradient, which means to say usually golden crosses and death crosses, they're stronger when the gradient of the cross is higher. So if you have like a flatter gradient cross, it's usually a weaker cross, but it doesn't mean that momentum can't pick up. Okay, a cross is still a cross. So if you have one of these, that's usually like, you know, if let's say your 150 moving averages and 200 moving averages going like this and your cross is like that, what it means is that your price movement was more exaggerated upward, right? But with this one, you can see it's kind of like flatter, right? That means the gradient is crossed, but then it needs a bit more time to gain momentum, right? The other thing that I saw here is this is the low. It's been making higher lows, and also it's been kind of like in this zone, and I feel like it's consolidating to go up within this ascending triangle now. So I saw this, and I kind of took the perspective that volume was also going up over here, making higher highs, higher lows kind of thing. And so I decided that I want to take this as a little swing trade. So a swing trade between the swing low and the swing high. This point over here is what we call a demand zone, right? And then the point above us is called the supply zone, right? So in that case, what I've done is gone ahead and taken some 140 calls for October 16th. I'm pretty sure that's the date. So this is an official call out on the stream. If you are here, this is a freebie for you guys. You don't need to always be a part of the mentorship course to get freebies from me. I give a lot of freebies on here as well. All you have to do is smash the like button. That's all you have to do. For this one, all you have to do is smash the like button. And if you can't smash the like button even after I give you a free trade or like a free trade idea, then you know what? I still love you. So if you like that one, you like the setup, you think it's a good one, smash the like button, man. Come on. It's free. Do it. It only takes a second, okay? I appreciate it. Cool. So, and then the other thing about this trade is here's the risk to reward ratio on that trade. Let's say you enter somewhere here or anywhere in this region, to be honest. You have a nice little risk that you take on, which is about 1:2 risk to reward ratio. So, for people who've taken the EGM mentorship course, you know this is what I taught, right? That's the bread and butter. So, make sure that you are aware of these outcomes, okay, and how do you set them up. So, nice little setup here. I think even if Beyond goes down further down here, I will only cut if it kind of breaches this liquidity zone here, which it might reverse. So I'm okay with holding this options contract for a while. I only got one contract, and it's like literally $900. So $9.50, I believe, is what I paid for it. So yeah, okay, cool. Cool. All right, nice. Can we get to 100 likes? You think we can get to 100 likes with that one trade that I called out, or nah? Let's see. T, what's your take on buying Apple shares for long term? Is it good to dip? I sold my Apple shares recently, and I'm gonna buy them on a dip. If I do buy them, I'll let you know. I do the live stream every day, so when I do buy them, I'll let you know. I think S&P will drop around election time after that boom going up again. I think it's actually the reverse of that, but then who knows? I feel like the elections are gonna drive people, drive the stock market higher. In fact, still holding Disney. Nice. I actually sold that Disney position. Didn't like the way it was moving for some reason. Are SPY puts worth it though? It has less idiosyncratic risk. I know, but the thing is that it's cheap. It's a cheaper option to hedge. That's the reason why I would rather take SPY than buy a overexpensive VIX or something else that is a little more expensive. So I personally just like the risk to reward ratio for the SPY puts. That's all. But I like QQQ though. So QQQ more heavy on tech than S&P? Yes, absolutely. Yeah, QQQ. Wait, are you asking me if QQQ is more heavy on tech? QQQ is the home of disruptors and innovators, and those are mostly tech. What indicator is the blue line he is drawing over? You mean this? This is a on balance volume indicator. OBV. If you go to the little thingy here, FX, and type OBV, you'll find it. On balance volume. Can you explain the supply and demand zone? Sure. So it's not exactly very easy to explain it in a very quick summary, but I can try. Essentially, you have this little two liquidity zones here, which are for buyers and sellers. How do I know this is the entire? Because many of you, how you view supply and demand is very different from how professional traders view it. We don't view it as a singular point on the chart. We view supply and demand as a zone. So this would be the zone at which sellers enter the market, right? And we're going to make it red. And this is the zone down here where buyers enter the market, and this is we're going to make it green. So this is naturally the zone at which the buyers and sellers enter. Now, how do you draw that zone? Well, you know that there are tails for these candles on the bottom, and you know where that specific point is. All you got to do is draw a box up till the end of the tails of your candlesticks to the maximum distance, and where it meets the bodies usually. Now you could either go more or less in that region. This is usually a little more accurate, but that extreme push down is where market makers came down to reach for liquidity. This is where market makers came down to reach for liquidity and then grabbed it and went back up. We call this process grabbing some paint. Paint grabbing. They come down, they grab the paint, and then continue to paint upward. Okay, and then what happens on the top is sellers push the price down again when we enter this liquidity zone on the top. So the same way this is done for the top, and you can see it's a bunch of candles with a nice little long little grabs here. So you kind of pick where the most number of wicks are and also bodies are. It could be a much shorter zone, to be honest, on the bottom. Like it could be a little higher like this, but I like the fact that there are some wicks over here as well, so it covers everything. And so then on the top, you'll be looking out for that zone as well, because that will be like a danger zone. So you can extend this one out and then be careful of that specific zone. So that's kind of like the idea there. Okay. All right. So I hope that was kind of informative for you. Let's see here. Let's go. The whole crew getting in on Beyond. I pounded the smash button. Thank you, man. Appreciate that. Good morning. Good morning. How you doing, man? Alex, Goldman Sachs. Ooh, I don't know. I haven't looked at it in a long while. Let's have a look, man. Let's see on the daily here. It wasn't a nice little uptrend, so what happened? Ooh, it's going sideways now. Nice little channel formation. Well, it doesn't really look bullish to me. I mean, kind of a very, like, it's, you can see that it's clearly like a very defined sideways channel here. Let me get rid of these moving averages since they're kind of useful at this point. Useless at this point. And then get rid of the support and resistance as well. You don't really need that. Get rid of the OBV because you don't really need that for this one. And now you can kind of see it a bit more clearly here. Well, you're basically in the channel now, right? So, kind of bouncing. A break above this level 221 would be the opportunity, but we don't want to buy it on the break though. What you want to do here is wait for it to break out, come down, test this as a support again, and then continue its journey upward again as it confirms. So you need to wait for that wave, test higher, comes back lower, but it's higher than this point here. This would be my entry for GS. So it's still a long way to go for this setup, considering this is a 4-hour chart and it's moving extremely slowly. But you never know, right? You never know. It may move up. So personally, I don't like the setup. Thank you for that. No problem. Have you looked at NAK? No, I have not. What is that? Dynasty Minerals Limited. Probably less than a 10 billion market cap. Yeah, it's less than a billion even. Unfortunately, I don't like to trade stocks that are less than 10 billion market cap because it just can be manipulated, and so I don't want to do that. I'm sorry, man. I think they meant the EMAs for the Golden Cross, not OBV. Oh, okay. Man, y'all better hop on any trade T calls out. My portfolio has done a complete 180 because of this guy, Nuggets. Thank you, Jason. I appreciate that, man. But, you know, this channel is not investment advice. I'm just giving you my ideas, and it's up to you if you want to follow it. But remember, this is a educational stream only. Just a educational stream, nothing else. Okay. What do you think about Pinterest right now? Piton looking delicious. Good morning. Good morning, man. Jacob, how are you doing? Any chance to show Apple like you did for Beyond? Curious to see breakdown. Thanks for all the content. No problem, Joe. Welcome into the stream. Hope you guys like it here. Make sure you guys smash the like button if you're here. I appreciate you guys being here, by the way, taking your time out to come here. Okay. Cool. Do we follow the trend with crowd and docu? That's a tough one. It can go either way, man. It can go either way. Can you go over word chart? Thoughts on silver and gold? Okay. Right before I cover all of these really great questions here, I want to cover Lululemon, which is our ticker of the week. I'm going to do it. Well, today's Fundamental Wednesday, so let me complete that real quick. It shouldn't take me more than 10-15 minutes. I'm going to go through a few key things, but it's a very, very easy scenario for this one. Stock is super overvalued. If you want the TLDR, this is a very overvalued stock at this point. Okay. And I kind of want to go with Finbox valuation at this point because I tried doing the valuation myself, and I think that there are some metrics that are just not making sense at all. Okay, so financial highlights from the last quarter, just to make you guys aware of what's going on over here. Net revenues decreased by 17%, and their direct-to-consumer revenue increased by 68%. Gross profit decreased by 21%, and then they have income from operations decreased by 75%. That is a big one. Okay, and that was the main thing that I was talking about in the previous stream. So obviously, as a result, their income taxes have decreased, right? And then now look at the same year comparison for 1 year over year, and you can see really quickly here how Lululemon is really struggling as a business. It's kind of in a position where it has to innovate in order to succeed. So it has tried to do that through like warehouse sales, stuff like that. And to be honest, it's really struggling, but they did a good job with putting some initiatives out there where they were trying to generate additional sales. And you can see that the cost of goods sold has kind of decreased here. Net revenues decreased, but all in all, they're struggling. Okay, they're struggling. Net income down big time. So what was the biggest thing that caused the driver here? Now you can see that the gross profit here down by almost 90 grand or so. And then their selling and general expenses went up by 10 grand or something, right? Income from operations hit big time, right? So that's the main driver here, okay? And so basically their business is not generating enough profit, okay? And it makes sense because COVID's here. But here is what management has to say, right? They said, we separately track comparable stores, blah, blah, blah. What was the part I was reading earlier? Let me just show you real quick. Sometimes you go through these things and then you forget where it was. These documents are so huge, by the way. This is the 10Q for the last quarter. So make sure that you go dive into these documents because they're important. Okay, if you're an investor and you don't look at these things, yeah, you're missing out on a lot. Okay, so here, this is what I was looking at earlier. Here we go. So cash use in operating activities increased by 58 million to 121. And then as a result of a decrease of 68 million in net income, primarily due to the impact of COVID-19. So that's because the temporary closures of company operated stores. So because their stores were closed, they didn't sell much merchandise. That's what caused that big dip in their store income. Okay, so income from operations. And then they said that they entered a credit agreement, but this is in 2016. They have revolving credit facilities in both China and, let's see, a bunch of other places. Okay, here are the number of stores operated worldwide, which we saw in the last live stream. I brought this up. And the important metric here was China. Remember, they're expanding very quickly in China because there is an expected spend of about $7 billion for Lululemon. Okay, and so it's not just $7 billion for Lululemon, but $7 billion for the yoga industry. Okay, and the fitness industry. So people are starting to get fit there, and they want in on Lululemon stuff. Okay, and so because of that, they're starting to expand rapidly, and you can definitely start to see that within the next few quarters they're going to expand aggressively there. Okay, and it would make sense for that. Okay. Legal proceedings, I think they put it on a separate sheet. And risk factors, these are just nominal things that they have to say. Reliance on fabric producers and whatnot. This is the breakdown of where their stuff is produced. Approximately 33% done in Vietnam, 16% in Cambodia, 15% in Sri Lanka, 11% in People's Republic of China, 2% in Taiwan. And they work with approximately 39 vendors to produce products. Okay, 5 of which produce approximately 56% of products. So these are all things you wouldn't know if you didn't read the 10Q. And then we source other raw materials for our content labels, blah 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 blah, buttons and sleeves and clasps and whatnot. Okay. What was the other stuff here? Something about a security breach also. They're putting it out there that, this may happen. Intellectual property rights, changes in tax laws. Okay. Great. I don't think there was much more that I wanted to go through here. This was all about it. And then sale of equities. This is normal stuff. Okay, we're good. We're done with this. So all in all, you can see that Lululemon, according to Finbox here, and I actually do like the way this valuation is done for once. I don't have much complaints for this. Is a fair valuation of about $200. It's a fair value. Okay, considering that they're gonna grow at no rate for this coming year. Let's just say they break even, right? The next year they grow at 26%. I did the operational cash flow study for this. It's about 20%. So giving it 26% and taking away 5%, that's fine. 9%, and then average of about 9, 12, 17, 10, 9. And then no growth again in 2028. That seems about fair to me. EBITDA growing at a nice little rate here, about 30%, 26 to 30%. And then the percentage of revenues for CapEx, which is capital expenditures, keeping at the 5-year average or so for this next 5 years, and then reducing to 4% and eventually 3% for the next 3 years seems fine to me. And the net working capital here is about 8.7% of revenue, so we're going to keep it at 8.7. I changed that already. Depreciation and amortization at about 4% of revenues, which the average was about 3.8, just kind of rounded it up here. And the tax rate at about 26%. Because the effective tax rate has been lower. Remember that they had a big tax rate drop, so I took about a couple of points off. So the discount rate being at about 7 to 8%, they don't have much of a operational expense. This company is actually pretty good fundamentals, but the problem is that the stock is overvalued. Okay, now terminal value wise, we're going to leave it the same what it is. This is your perpetuity growth rate, which is your risk-free rate plus the GDP rate of the United States of America. So that's about 3% plus about 1.5%, about 4.5% ups on the high, and then 3.5 on the low. Let's just say that's about fine for the perpetuity rate here. So now let's look at the company's financials here. Revenue is growing about 20% for the past 3 years, operating income at 28%, net income 28%, and diluted EPS at 30%. The ROA is about 20%, not bad. 36% higher than industry average, or about the same as industry average. And then ROIC, invested capital. By the way, if you want to see what the industry average is, you can go to NYU Stern. Oops, NYU Stern, and then you can go industry average. And they have a whole, but NYU Stern has a beautiful, like it has a webpage where you can find a lot of different things here. Okay. So I strongly urge you to go have a look at these data sets. They're awesome, and you can actually put all of these things into Tableau, which is a nice little visualization software. Okay, if you've never heard of it before, you should definitely check out Tableau. If you want to play around with this one, it's pretty cool. It's a company that got bought. I think it was bought over by Salesforce, if I'm not mistaken. Nice little company that helps you visualize data. So you can take these data sets and put it into Tableau, and then Tableau kind of helps you change the variables around to show you what you can do with it. So like you can get some really nice graphics, stuff like this. I'm not sure if you heard of it, but it's definitely stuff that big companies use. And if you want to do some analysis on your own and you have powerful data sets, you could definitely use Tableau for it. Okay. So that's I just want to mention that very briefly. ROIC here at 25%, which is really good, and net margins at 15% for our clothing business is excellent. Debt to equity ratio, remember what we say over here, we always want it to be less than 1. That means that you take on less debt than you have equity, which is pretty good. 0.43, they have 0.5, which is better than most companies. The current ratio at 2.6, which shows you the assets over liabilities. They have more assets than liabilities, which is another good thing, right? Current assets over current liabilities. And then, of course, with the quick ratio, remember this is another company that holds what? Inventory. So it's going to be your current assets minus your inventory, right? Minus inventory. And then over your liabilities for this one. So your the numerator is going to be a bit smaller, and it still is over 1, which is a good thing. So in both areas, it passes that step. So the fundamentals are great for the company, but the company is overvalued. Okay, it's a good company. It's a good company to own, but it's overvalued. That's the issue now. Okay, bought up too much here. Fair value is half. It's roughly half. Okay, we're looking at a half fair value here. So definitely wouldn't be buying aggressively into the stock. That's what I would say. Now, doesn't mean that we should short the stock. Well, I don't think so. Markets can stay irrational longer than you can stay liquid. So let the thing come down on its own, and then you decide if you want to buy it. You could definitely start to be a buyer around 300 here if you want to nibble on some. Seems like it might come down here in the short term, right? If a market drop comes along. Okay, but eventually it's going to have a sell-off, eventually. So definitely don't be buying into this right now. Okay, and that kind of concludes Lululemon's fundamental analysis for this week. I hope that you guys found that helpful. If you did, smash the like button and throw a couple of fire emojis in the chat. Let me know what do you guys think, about Lululemon. I hope it's helpful for you guys. Fair value, remember, is about $200, so 207, and I kind of agree with that one. So Make sure you take a look at that. I do have some open positions still with my, let's see here, let me just tell you what open positions I have. And I swung this from yesterday. Oh yes, I took a position on Roku yesterday. So I have some 190 Roku calls. I saw some flow, options flow for it. Oops, let me turn my little things back on here. Okay, cool. So upon seeing Roku break out of this little all-time high, I feel like it's about to make another run here. I went ahead and I took some calls on Roku for September 18th, and I took some 190 calls. I got stopped out on the first round. It came down, touched my stop loss, and then I re-entered them right before I went to bed. Okay, I didn't call it out, but I got about 6 contracts, and the position is about, I want to say, 2.6% of my portfolio, so it's not too bad. I have some Intel calls playing a nice run up here, if we can get the run up. I'm not sure if we will, but it's looking promising, so let's see. Let's see what happens with the news, with semiconductors and this and that. Looks probable, okay. And then TTD here, looking really nice as well. This was a call out by Kevin Fomo, who is one of traders from Option Swing, and it's really nicely up after hours here, about $12 up. So I'm expecting to make some good money from this contract as well. Should do pretty nicely here. $12 looks like probably about $200 profit overnight. Should be nice here. And then of course the Beyond contract that I was telling you about. Beyond also looking decent, right? As is, I'm holding my Microsoft and Boeing both positions. Okay, so those are the contracts that I'm holding right now, all my portfolio. Okay, and I will be holding these into the foreseeable future. So that will be something to look at. Okay, now let's go and look at some of your questions here. So I think I stopped somewhere here. It was, do we follow the trend for DocQ and Crowd? Oh wait, hold on, I didn't answer this one. Any chance you can show for Apple what I did for Beyond? Okay. Well, with Apple, you're at kind of an all-time high situation. So yeah, I mean, there's not really much you can do about this. I mean, unless you want to do an extension for a fib, not really much to do here, brother. I mean, to be honest, not really much. This would be the values you're looking at for the fib here. And going to a 15-minute probably better. So this is what you're looking at right now. Next level to hit would be 135. Well, we already went past all of this, so you're looking at now this level here. $61.8 probably is the next target here. So looking at 141 would be the next target for Apple on the upside. That's what I would see from the fib perspective. So not really much to see from a liquidity standpoint here. Just seems like it's being bought up with the market, to be honest, Joe. Do we follow the trend? That's entirely up to you. I personally wouldn't follow the trend. I don't like chasing the FOMO. Let's see here. Thank you for your input, no problem. Can you go over work chart? Sure. What about it? All right, you got to be a bit more specific. Like, I mean, what about work do you want me to go over, right? It's going to have its earnings, I believe, today or tomorrow, right? I think it's tomorrow. So expect this one to possibly run up more. I sold my contract already. I got out here. I made 100% on work and I'm out, right? I'm not trying to make a crazy amount of money on this one. And I don't play earnings because it's a 50-50 flip either way. So with work, it's consolidating, and I mean there ain't much to talk about here. It's either going to go upward here, or it's going to come back down to close this gap and come back to this moving average here. So it's a 50-50 flip at this point. Thoughts on silver or gold? I don't like them. As more, I don't know. I mean, I personally don't like getting in long right now. I want to wait for a little bit more of a drop. Like maybe if it comes down to 200 moving average, yeah, I might probably buy some, but not right now. Okay, I think ZS and Microsoft still have enough juice for a day trade. Probably not with ZS. It's been running for a while. But then, what do I know? It just rallied like crazy, right? It just went up like nuts. So maybe. Who knows? This market's irrational. Anything can happen. I don't have a fortune ball in front of me, Jason, but Microsoft definitely has some room to go. That's what I would say. KR 37 calls 918. $37 calls. You're playing a swing trade here. I see what you're doing. I don't see the case for the swing trade, man. I don't see the volume. I don't see the momentum. I don't see any crossover. What I do see is bearishness. I know what you're thinking. You're thinking a possible bounce play here, but where's the confirmation though? You're betting on something that you haven't confirmed. That's what I'm saying on Kruger. What I see is bearishness, and it's using the moving average as a resistance, right? Moving average pointing downwards, right? And even though it's bouncing, you need to wait for one of these and then enter here. You can't enter right here because you don't know what the heck's going on. You don't have a confirmation. How are you going to take the long position? That's my question. So I don't agree with that, unfortunately. I like your Baba put thoughts on re-entry in a couple weeks. Yep, absolutely. I took the Baba put, cashed it out, and now I'm thinking not yet. I think that we need to wait for a nice little drop on everything. That would be nice. So puts on specific tech companies would be good. Baba's not really a very good one to buy puts on right now. It's kind of running hot in my opinion. So be careful, man. Be careful. Can Lulu still run up though before earnings next week, or what do you think is wise to pull out now? Definitely wise to pull out now, in my opinion. Do you really think they're gonna, turn around? Not right now. I don't think so. Thoughts on JD or big? I'm not sure what kind of thoughts you want me to give you. Too late again in Microsoft. I'm worried because of NQ levels. Yeah, it might be. It's really one of those things. Like Microsoft is a stock like you can own typically any time, but it's just up to you, to be honest. How do you exit your leaps if you are in a profit or in the money with 2 weeks to expiration? You just sell them. How do you exit your leaps? You just sell your leaps. That's all you do, man. What? I'm not sure what you mean by that. Thoughts on shorting Tesla? Absolutely not. Thoughts on buying Tesla? Absolutely not. Thoughts on doing anything with Tesla? Absolutely not. That's my thoughts. What are your positions on Intel? I have a 50. Let me check. $55 calls for 918. They're very cheap and they're already up by $100. What was your beyond buy? 150 calls with what expiry? 140 calls for 1016. Should we get into Piton and Chewy before earnings? That's up to you. It's going to be a Piton's earnings are already being priced in right now, right? It's already been priced in. Chewy also probably, more than likely. Yep, both priced in. I definitely wouldn't. I don't like chasing, man. I don't find it enticing to chase things. That's all I'm gonna say. And with that, I want to say thank you guys for letting us hit 100 likes today. I appreciate you very much for being here. Thank you for taking your time out. I managed to go through all the questions, so that's good. I wonder if I missed out anything here. Oh, I did miss out some of them. DocuSign, definitely don't do that one. Expedia, possible. LMT, I like Lockheed Martin as a play, actually, to be honest. That's probably a good one. I didn't look at the price, but I think it might be a good one. Moderna, maybe. I'm not sure. Don't know much about the company, but possible. Walmart, absolutely. You can hold Walmart. Work, if you want to gamble, sure, go for that one, because the ER is going to be tomorrow. RKT, probably, but I wouldn't recommend it. It looks like a pump and dump to me. Still holding Disney. No, I already answered this one. Okay, great. I answered all the questions. Awesome. Yeah, I just said Expedia. Possibly hold that one. Let me see. Expedia. Oh, for this week though, damn, bro. You got some cajones. Oh, man. 104, you're expecting it to break all-time high, man, Drew? I don't know. I don't know about that. But maybe. Maybe. I mean, if you're feeling bullish, then sure, but I personally don't like it. I think that it's having struggles breaking up here. I think if it goes up to 101, you should sell. That's what I think. I have the same calls as you for Roku. From what I can see, it looks like it can run to 190, 195. Do you see the same thing? Yep, that's what I see. Absolutely. I'm praying for it. I would say don't hope and pray, but instead, you know, manage your risk on that one. Set a stop loss, man. Can you type out your Roku and Beyond calls? Sure. This is not investment advice. First of all, Roku 190 calls, 918 and beyond, 140 calls, 1016. There. That's what I have. I'm probably going to get out of Roku today though. Just saying. Either today or tomorrow. I will not be holding that contract for a very long time. I wanna just play this run up, the pump up, and then I'm gonna dump it. That's what I'm gonna do. I'll sell my contract to somebody else who's willing to hold it. And with that, I want to say thank you guys. Have a great day. I'll see you guys on tomorrow's live stream. We're gonna do a webinar on the time value of money. So make sure that you check out the stream tomorrow. We're gonna do a nice little breakdown of what time value is. Something that you guys should definitely learn if you didn't take finance classes. This is a very important concept for any financial investment that you make. So highly recommend you to attend tomorrow's webinar. Okay. Intel, I said $55 calls for, I believe it was 918 as well. Yes, 55 for 918. There. You have them all. Remember, this is not investment advice. Not investment advice. It's educational. Educational ideas. Okay, great. Have a great day, guys. Have a great trading day. See you tomorrow on the live stream. Have a good one, guys. Bye-bye.